The Eurozone situation remains the dominant driver of market sentiment, as has been the case for the past couple of months. Now, heading into the weekend, we saw markets finish on a fairly upbeat note, and this is on the back of progress we've seen in the Greek bailout package. This has seen continued support for the New Zealand dollar against the US dollar. However, against the euro, the New Zealand dollar has been underperforming, with the euro making some steady gains over the past week on the back of improved sentiment in this region. Now, with the Greek bailout package, there are a number of large hurdles that need to be cleared in order for it to go ahead, and these do have the potential to trigger a loss in confidence in markets. As a result, we are quite wary of ongoing volatility in the coming weeks. Now, these potential triggers include each individual government has to approve the Greek bailout package. In addition, March 8th is a critical date. This is the date for private sector bond swap with the Greek government, and seeing strong participation from the private sector is critical for the Greek bailout package to be successful. Now, this week's key event is the long-term funding facility provided by the European Central Bank. Now, if bank demand remains quite strong for this funding facility, it would suggest that banking strains remain quite acute in the region. And if we did see strong demand, it is likely to weigh on the euro over the coming week. It is the key event, and we'll be watching quite closely for Wednesday. Now, there have been some very interesting developments over the past week in the New Zealand-Australian dollar cross rate. We've seen the New Zealand dollar outperform the Australian dollar, which has brought it back above 78 cents against the Aussie dollar. Now, what has been driving this is the government leadership challenge in Australia. This has been weighing on adding uncertainty around the Australian outlook and has been weighing on the Australian dollar. Now, with a vote up this week, we do expect that this uncertainty will pass, and this will in turn see the markets refocus on the fundamentals for the Australian dollar, which are actually quite upbeat. In particular, it looks like the Reserve Bank of Australia have moved away from an easing bias to a more neutral stance. This suggests that there is less prospect for rate cuts from the RBA, which would continue to provide support to the Australian dollar in this environment.